Welcome, everyone. Welcome to the September version of the Wisconsin Bankers Association Compliance Corner. Once again, Scott and I are here to outline for you various releases from the agencies, whether it be rules or guidance or just information pieces that have come out through this past year. We want to make sure that it's on your radar. Our hope is to make sure that these short videos just try to keep your pulse on what's going on in the compliance area so that you can make your adjustments accordingly back at the office as it relates to those releases. So this month we have a couple different agency items that we want to walk you through. Our Prudential banking agencies have issued a number of different things that Scott will walk us through here in just a moment. There are 3 items from the Bureau, the Consumer Financial Protection Bureau, we wanted to make sure that you're aware of. Several items from FinCEN, ongoing guidance, and some new resources. And then also, just briefly, an item from the Federal Trade Commission, FTC, and also FCC, Federal Communications. So with that, I'm going to turn it over to Scott to walk us through what our banking agencies have on their short list this month.
All right. Thanks, Heather. And so, we've got some information from the Prudential banking regulators, FDIC and OCC in this case. The first one is a final policy statement on transactions conducted under the Bank Merger Act. The goal here being, on both behalf of FDIC and OCC, transparency and just giving some additional guidance on their steps taken under transactions that are conducted using that act. And so FDIC's statement of policy addresses the scope of transactions that are going to be subject to FDIC approval, the process for evaluating merger applications, and the principles that guide its considerations under the Act. And then similarly, OCC has issued its own policy statement clarifying its review of applications. And within that statement, it outlines the general principles OCC will follow, its decision-making process, including consideration factors. Then also on the slide, we have some additional FDIC items. And so as we've seen, FDIC has done a lot related to deposit relationships lately. And so we just wanted to include this as an FYI. So on this slide, FDIC is proposing a rule requiring banks with certain custodial accounts, generally third-party non-bank agreements that are holding deposits for others, to take certain steps regarding maintaining accurate records for those accounts related to who the actual individual owner of those funds are, and as part of that would require daily reconciliations. FDIC has also released the results of its annual survey of branch office deposits as of June 30th of this year, 2024. And that data goes back quite a ways. It goes back to 1994, and that can be generated in a variety of methods. So you can pull it up in reports, tables, and you can download it as well. So there's quite a bit of functionality there in terms of how that data is presented and just the raw data that is available. So you can find that on FDIC's new Bank Find Suite resource in the link below. And that's where that's going to be generated in the future as FDIC is looking toward using that resource more. With that, I will turn it over to Heather.
Thanks, Scott. And as you go through our PowerPoint materials, you'll see that we have asterisks for each of the items that we have links for you below. So I know we failed to mention that when I launched, but I'm assuming that you all know this by this point, having gone through this now a year's worth of compliance videos. But for those of you who might be new, the asterisks mean that we have links to the various resources that we're mentioning. So we wanted to make sure that all of you were aware of some releases by the CFPB, by the Bureau. First up being HMDA, and as we approach here, 2025, if you can believe that, they have released the HMDA filing instruction guide, and also a complimentary supplemental guide for quarterly files. For those of us that have to file quarterly, there's an additional resource which is quite helpful. We have several here in Wisconsin that are subject to the remittance transfer rule based upon activity bases, and we wanted to make sure that you were aware of the Bureau's plan to revise that rule in a very narrow manner. For those of you who are engaged in this area, you know that you have a disclosure that need to be given to the sender about the remittance transfer. And included in the information of that remittance transfer disclosure is contact information for both the state and federal regulator so that the consumer can contact the regulator with questions or concerns. Well, through the operation of the rule, they're realizing that consumers are calling the agencies about transaction-specific information that regulators don't have. And so the proposal is to revise the information on that disclosure of who the consumer is to call. So first up is the consumer should call the financial institution, the bank that that initiated the transfer on behalf of the sender with respect to the actual transaction itself. And that if there are unresolved questions that need to be answered, that's when the consumer should be contacting the state or federal regulator. So when you look through the proposal, you'll see that the model forms that are in Appendix A have been revised to make that small clarification of when the consumer should be contacting the remittance provider, and then separately when they should be contacting the regulator. So I think when you work through that makes sense for those of you who are sending remittance transfers. We also wanted to make sure that you were aware of a recent circular being issued by the CFPB. This particular one happens to be called Improper Overdraft Opt-in Practices. And this circular is similar to previously published circulars where the Bureau poses a question and then provides an analysis and an answer to the question being posed. And this particular question is, can the bank violate the law if there is no proof that the bank has obtained the consumer's affirmative consent before, I like this word, levying, pretty strong language there, overdraft fees for ATM and one-time debit card transactions. So here we are, Reg E, and as we know, we need to receive the consumer's affirmative consent in order for us to charge an overdraft fee in connection with the ATM or one-time debit card. So the analysis goes through and reminds the banks, everyone, of what must be first obtained from the consumer, the opt-in and the disclosures that need to be provided, and to have that proof when examiners are asking for how your consumer had opted into the particular service. So I would say it's nothing new here, and we included it though just to make sure that you're aware that regulators are going to be looking for that affirmative opt-in, voluntary response by the consumer wanting to have that overdraft service. And the circular is what's confirming that Reg E standard. So just more of an FYI than any new practice there, but still something to make sure you've got implemented back at the office. Scott, I think you've got a few FinCEN items to walk us through.
Yeah, and FinCEN certainly has a few topics here. It's been recurring, obviously, with all the fraud trends that we've been seeing. But as with past updates, we did want to let you know that the BOI, the Beneficial Ownership Information FAQs, have been updated again with additional reporting company questions and answers. So again, as that resource continues to be maintained by FinCEN as a helpful tool for your customers, your business customers that might be subject to that rule, just wanted to make you aware of that. On that same line, FinCEN has also released a beneficial ownership reporting outreach and education toolkit. So again, another new tool from FinCEN here to help educate small business owners about the BOA requirements. And so this resource has been designed to specifically with organizations in mind to help them out, such as banks, to distribute this information. So an additional resource to be used to given and referred to those customers who might still have questions or are otherwise still unfamiliar with their reporting obligations. We know that some of you still have those customers that maybe aren't as aware or just aren't understanding the requirements and are coming to you with questions. And so FinCEN really has put forth a strong effort to help educate them, between the notice that we talked about last month and the continued updates to the FAQs, and now this new resource, along with all the other resources that are available on their website. So where you do have customers with questions, they're still maybe facing some confusion over what their obligations are versus the questions that banks' obligation are to collect and report as to the certification as beneficial ownership. Make sure to take advantage of those resources. Then this next item relates to an issue many of you have likely experienced and are going to continue to experience, unfortunately, that of check fraud through mail theft. And so FinCEN issued a financial trend analysis on these incidents that's based on the BSA data that's been filed. And so FinCEN has been aware of this since back in 2023. They put out an alert, which we had also shared, that has all the indicators, all the information, recommendations for filings. And so what they've done with this report is during the time between that alert and the creation of this trend analysis, they've gathered all of their reports, which has ended up being over 15,000 from 841 different financial institutions. And the data that they've found amounts to more than 688 million reported in suspicious activity. So just within that 6-month period, since they put out that notice asking for reports, right, gathering all this data, compiling all this data, 688 million in reported. So long story short, this is going to be an ongoing fight, right? But I think it's important to look at this and important to see that FinCEN is well aware. The post office is well aware. FinCEN is making the post office well aware, encouraging training, encouraging communication, and continued cooperation, right? And that means continued cooperation in filings where you see this. That will continue to help FinCEN, who's going to continue to, right, create the resources and work with the post office to see what we can do to continue to combat this. So take a look at the data. The trends can be helpful, if nothing else, to just understand this as a broader issue, but also how the check fraud occurs, right? Statistically, where it's most frequent, what the type of usage is, and of course, the big takeaway being to remain vigilant on this issue. Lastly, FinCEN published a notice on its renewal without change, and this is for its check reporting obligations that many of you are likely already familiar with. More specifically, those existing information collection requirements for when there's an issue or a sale of bank checks, so drafts, cashier's checks, money orders, traveler's checks, in currency between 3,000 and 10,000. So again, in short, just wanted to mention that FinCEN put that out there with no change to those existing obligations. And with that, we'll wrap up FinCEN, and I'll turn it back over to Heather.
Thanks, Scott. So there were 2 other agency items that we wanted to make sure were on your radar. One from a BSA perspective, and then 2 just for planning purposes, should you engage in calling customers. But first up, the FTC release. So here we have a data source from FTC, which is reflecting the massive increase in losses to Bitcoin ATM scams. So certainly Bitcoin ATMs, nothing wrong with those. Those are legitimate machines and tools that can be used to engage in transactions involving Bitcoin. However, what's been happening is consumers are being duped to try to quote unquote protect their money by taking their money out of the deposit account and putting it into purchasing Bitcoin. And in this particular process, they're being scammed, that it isn't protecting their money. The money is going directly to bad actors, unfortunately. And so when you look at that particular report, the numbers are staggering, just as much as the check fraud mentioned by Scott on the previous slide through FinCEN. So since the report was starting to collect data, since 2020, the amount that consumers have lost in connection with Bitcoin scams is over 110 million in 2023 himself. So it's quite crazy with what we're seeing on the scam front. And just for this year, 2024, the median loss that is being reported by FTC is $10,000. So that's a lot of money for your customer to take out of their deposit account and go to a Bitcoin ATM in hopes of purchasing or keeping their money safe via Bitcoin. And lo and behold, that money is going right to scammers. So we wanted to make sure that those of you who are engaged in the BSA area know of this potential scam and to be monitoring for that when you're looking for certain transactions of your customers. And also for those of you who are in the marketing area, this might be an opportunity to get the word out through consumer information pieces to be aware of these types of scams. The resource does have some tips to try to help consumers spot and avoid the scams. And also for those of you who are engaged in your community where you're out doing presentations to different community groups, just to add this to your list of what consumers should be mindful of, that if it's too good of a deal, it's potentially a scam. And that's what, unfortunately, some of our customers are falling for. So beware and take advantage of the information within the release to try to help educate your consumers. The Federal Communications Commission, FCC, has a proposed rule that has implications on AI, artificial intelligence technology. FCC has been doing a lot of work in the consumer realm to try to protect against unwanted robocalls and robotexts. And now AI is being used in robocalls and robotexts. And so FCC is wanting to create some rules that will protect consumers to make sure that they are being told that the call is being made or the text is being made by AI, to provide potentially an opt-out version so that customers aren't receiving those types of calls. And also then, interestingly, protecting those with disabilities who have seen some very positive outcomes of the use of AI and the ability to continue to use telephone services despite particular disability. So some good out of this as well, but wanting to make sure that those of us in the marketing area are aware of this particular proposal so that we can make our adjustments as we might need to when making calls to our customers if in fact we're using AI technology in those. So with that, Scott, I'm going to throw it back to you to kind of wrap it up here for our short call or short video.
Yeah, so let's wrap it up with just a reminder of the resources that are available to you out there in addition to this video series, this monthly series. On the WBA website, make sure to take advantage of all of the compliance tools and resources that we have on there, including our various publications, and also the training opportunities. If you're looking for training on a particular topic, make sure to take a look at that and the in-house legal training program that we have available to you, where we can develop a program that's suited particularly to your needs and what it is you're looking for. We also, of course, have the compliance hotline. Call us if you have any questions, call or email, whatever works best for you. And the opportunities to get involved through the WBA committees or sections that are available to you for the various areas within the industry. And don't forget also to look into becoming an advocate for the banking industry, right? So everyone who is listening right now, this is something that you should take a look at and just consider, because it truly everyone has a voice to share and be heard within the industry, and that is valuable. And there are opportunities to get involved. So with that, we will wrap up for the month of September here, and we will see you all next time.